Halpenny with us from the Bank of Tokyo-Mitsubishi. Derek, what are you watching in Europe right now? What's the thing as you go into the weekend you're focused on?
Well, the big news, of course, is the potential for the EU IMF bailout package also incorporating senior bank debt bondholders into the ultimate bailout package from Ireland. This is certainly something new. The strategy from Europe since 2008 was that this wouldn't happen and all the risk was moved on to the sovereign. But obviously now, given what's happening in terms of the debt crisis, there's possibly a reconsideration taking place, and we could see some form of package that also incorporates to some degree senior bond debt holders taking on some of the burden.
That's the first time I've heard about this. We were talking about this early this morning in the U.S. Emily, bring up the Paul Krugman op-ed. Derek, I don't know if you saw this op-ed. Krugman quoting the great author Jonathan Swift, eating the Irish. What will it take for the serious people to realize that punishing the populace for the bankers' sins is worse than a crime? I mean, to a great extent, Derek, this is the issue. Are the bankers going to take the heat? Not only the Irish bankers, but the bankers that own the paper, right?
Yeah, I think certainly one of my concerns in the last week or two in particular has been that investors appear to be getting increasingly worried about what ultimately was the end game in terms of, the issue, first of all, was Greece, then Ireland wasn't Greece, now Portugal isn't Ireland, and then possibly Spain won't be Portugal, and there was no real end game in sight. This could be something that potentially sees an end game. Now, it's still very difficult. I don't know any details, but
sure,
certainly this would be the first indication of deleveraging, of actual write-down, rather than just shifting the debt from one place to another. And if the balance is correct, then I think ultimately that could be good.
Yeah, Derek, I really agree with that this is a sea change on this quiet Black Friday here in the United States to see people actually talking about markdowns, however you want to do it, a cram down or haircuts. Derek, here's a chart I made up today off the Bloomberg, and it's inflation-adjusted Dublin house prices. And they're not back to 2002 like the nominal series. They're back to 1999. I mean, the Irish people have really taken a hit here when you look at Dublin house prices and adjust for inflation. They're back 11 years.
Yeah, absolutely. Like most national statistics show something in the region of 50% in terms of house price decline. So, quite clearly in the specific situation on Ireland, the pain has been primarily on the household, and obviously now the 15 billion 4-year fiscal consolidation plan is going to put further pain on the Irish individual, and I think that's part of the reason why we're getting a potential change. It's this anger amongst Irish people that ultimately believe that it's not the EU and the IMF bailing out Ireland, but it's actually Ireland bailing out the rest of Europe, given the fact that they're protecting all these investors who invested into Irish banks.
Derek, earlier this morning on Bloomberg Surveillance on radio, I spoke with Holger Schmieding of Berenberg Bank. I asked him how Spain is linked to the challenges of Ireland and Portugal.
Spain is, of course, linked to the challenges. We have seen in the case of Ireland that it may not suffice to simply show that the government does not need money if there are doubts about the banks. Ireland is a fairly extreme case, but Spain also has banking issues after it had a real estate bubble bursting a few years ago. But the focus is now very much on Spain.
Holger Schmieding of Berenberg Bank. That was a great interview. Look for it on Tom Keene On Demand. Derek Halpenny, this is an interesting thing, this idea of Spain. And when you look at it, what could it do to the euro? What is the Bank of Tokyo-Mitsubishi call on euro-dollar?
Well, we've been bearish throughout the dollar sell-off and the euro rally when the markets were primarily focused on QE2 and the so-called debasement of the dollar. And we always felt at some point after the announcement of QE2 that the focus would definitely come back onto the debt crisis in Europe. And, you know, we held a 12-month forecast of 120. Now, given obviously the very large move we've had, we will probably adjust that lower again and possibly look at something in the region of 115 over a 12-month period.
Derek, a chart I've never shown folks on TV. Here it is. Spain becomes more peripheral. It's too much information. Derek, this is the spread between Portugal and Spain. This is something that's usually very boring, folks. And you can see, once again, the line moving down over on the right is Spain essentially catching up to Portugal in spread. Spain catching up to the worry. There's sort of a gathering momentum this weekend, isn't there, Derek?
Yeah, for sure. You know, I think you know, one, we had the budget passed in the Portuguese Parliament today, and I think that has brought about a degree of recovery, possibly just into the weekend. We'll have to wait and see on that. I think also, if you look at the performance of banking stocks, the story that I mentioned at the beginning in regard to the potential for bondholders taking some of the pain, that has clearly undermined the big banks in Europe relative to, say, the banks in the United States, and the two big Spanish banks have suffered. So one of the potential problems here is that if the plan from Ireland is viewed as very, very onerous, it could actually destabilise to some degree the banking sector in Spain, and that could bring about a further degree of uncertainty as we move into next week. So it's really, really important what the balance is in regard to the plan that possibly will be announced on Sunday.
Well, that's wonderful. Derek Halpenny, thank you so much with the Bank of Tokyo-Mitsubishi. Nice update there, folks.